Hello friends, in this video we are going to continue the chapter of money and banking. So in the last video with regards to money and banking, we have started discussions over the basic banking concepts. We have discussed like banks accept deposits, they provide loans. Like we have two different types of deposits, which is like DDs and TDs. We have discussed in detail of a bank. So different things we have covered. We have discussed what is CDR, currency deposit ratio, what is RDR, reserves deposit ratio, and why banks has to keep a part of deposits that are not being given as loans, what are required reserves, what are excess reserves. So different things we have done. Now in fact we have also covered the balance sheet of RBI. So different in fact in the last video we have discussed the concept of monetary aggregates. Now when it comes to when we talk about the term monetary aggregates, like they are the different measures of money. And in fact we have four different monetary aggregates, where M0, which is known as reserve money, M1, which is narrow money, M2 has no other name, but M3 has broad money, which is referred as broad money. So different monetary aggregates have been discussed. But in the concept of monetary aggregates, we are focusing on the contribution which is being done by the banks with regards to the money supply. But in fact in the economy it is not just the banks which contributes for the money supply. There are other entities like post offices, like some NBFCs that accept deposits. They are also going to contribute for the money supply. That is where we have discussed broader liquidity aggregates. So ఈ పాయింట్స్ మనం డిస్కషన్ చేయడం జరిగింది. Now in this video we are going to talk one important topic which is referred as non-banking financial companies. So non-banking financial companies, NBFCs. Now what exactly NBFCs mean? So when we talk about the non-banking financial companies, so these are the companies whose core business related to providing financial services like giving loans. That is what exactly we mean when we talk about NBFCs. So non-banking financial companies means they are the companies and their core business. When we talk about the core business, it means their main business. In fact, in nowadays, the companies have different businesses, but out of the different businesses, the core business, the main business is related to providing certain financial services like giving loans. So in fact we has to understand NBFCs are like mostly they are going to provide loans mostly. That is a point which we has to keep in mind. Now when NBFCs are providing loans, which we can clearly say that they are similar to banks, but they are not banks. That is the point. When I say they are similar to banks, which means like banks also provides loans. So that is where they are similar to banks, but in fact they are not banks. Now the question is how NBFCs differ from the banks. ఎలా వాటి మధ్య డిఫరెన్సెస్ ఉంది, డిఫరెన్స్ అనేది ఉందో we are going to understand. In fact, now we are talking about certain features of NBFCs through which we are able to understand how they are differ from banks. Now the first feature ఏంటంటే NBFCs, they should be registered under Companies Act 1956. Now when I say NBFCs, since they are companies, they has to be they should be registered under Companies Act 1956. But one point we should understand, ఏదైతే ఎన్బిఎఫ్సిస్ ఉన్నాయో, like there are thousands of NBFCs which are being operating in unorganized sector. There is no hardened rule that they has to be registered under the Companies Act 1956, but they should be registered under the Companies Act 1956. That is the first point which we has to understand. In fact, even the Reserve Bank of India doesn't know the total number of NBFCs that are being operating in India. So some NBFCs are so small, some NBFCs are so large like LIC. So that is where they should be registered under Companies Act 1956. But when it comes to banks, so banks are they are being regulated by Banking Regulation Act 1949. So it means if you look at the first feature, The legislation regulating the banks, the legislation regulating the companies, they are different. That is the first point, that how these were like NBFCs differ from banks and chapranki. The first point we can say. Now, if you look at the second point, like after completing the legislation, in fact, we know that NBFCs, their core business is like providing financial services, like giving loans. Now, there are different types of loan giving NBFCs. When I say there are different types of loan giving NBFCs, now what are the different types of loan giving NBFCs? So, the first type is referred as, like we can say, asset finance companies. Now, what exactly these NBFCs do? Now, asset finance companies mean these NBFCs, they provide loans to purchase assets, like in rural India, to purchase tractors, like in different parts of India, like to purchase cars, automobiles. So, to purchase assets, if any NBFC provides loan, we can call it as asset finance company, like Tata Finance, Mahindra Finance. That is where they are going to set. Now, if you look at the second loan giving NBFC, they are referred as infrastructure finance companies. Now, what does it mean when we talk about infrastructure finance companies? Like these are the NBFCs that provide loan for infrastructural development. So it means like they are going to provide loans for infrastructural development, like roads, ports, airports. So that is one type of loan giving NBFC. Now we have like gold loan companies. Now remember, when we talk about gold loan companies, these are not the NBFCs that provide loan to go buy gold. In fact, gold loan companies means these are the NBFCs where they are going to keep gold as collateral and provide loans. So keeping gold as collateral and giving loan. Now such a type of NBFCs we can call it as like gold loan companies. Now, in fact, the list goes. If we have like the fourth loan giving NBFCs, we can write it as microfinance institutions. Now, when I say microfinance institutions, which is like we can call it as MFIs. Now, microfinance institutions, in fact, they provide microcredit. Now, what does it mean when we talk about they provide microcredit? Micro means small. So, microfinance institutions, which are like NBFCs, they provide microcredit ante, like they provide a smaller amount of loan to the self-help groups, often at a lower interest rate. So, it means like when we talk about smaller amount, mostly like 2 to 3 lakhs of amount, and this amount is not given to an individual but to a group which is like self-help group, and they are being provided low interest rate. So compared to the market interest rate of that time, lower interest rates they are going to provide. So microfinance institutions. Now if you look at the four loan giving NBFCs which we have discussed, in fact these loans are also being provided by the banks. But when we talk about banks, a single bank can provide all these type of loan. Means a single bank can provide loans for buying assets. A single bank can provide loan for infrastructure. A single bank can provide loans to self-help groups. A single bank can provide all these loans. But when it comes to NBFCs, NBFCs are like they are specialized in giving particular type of loan. So when we talk about asset finance companies, they provide loans to purchase assets. So that is where banks and NBFCs they differ in with regards to like the specialization of giving loans in with case of NBFCs. But a single bank can provide all the loans which are being mentioned. Now once we have done the second feature, then the next type is like the next feature of NBFCC is like there are certain non-loan giving NBFCs. Now, what does it mean when we talk about non-loan giving NBFCs? When we talk about non-loan giving NBFCs, so NBFCs there are certain NBFCs where they are not going to provide loans. Now there are certain non-loan giving NBFCs like insurance companies. Now, when we talk about insurance companies, like we have the different companies of NBFCs, like insurance related to life, insurance related to health, insurance related to automobile. So it means like so కొన్ని కంపెనీస్ ఉంటాయి NBFCs. So they are going to handle the risk related to life, health, automobiles. So such a type of services they are ఎవరైతే ప్రొవైడ్ చేస్తున్నారో they are referred as like non-loan giving NBFCs, insurance company. And LIC is the best example. In fact, if you look at the second type of non-loan giving NBFCs, core investment companies. When we talk about the core investment companies means these are the companies like where they are going to buy the shares, bonds of another company. So instead of giving loan, they buy the shares, they buy the bonds of another company. Now the best example which we can write it under it is like mutual funds. Now if you look at mutual funds లో ఏమవుతుంది, they mobilize funds from the public, then the funds that are being mobilized is being invested in buying bonds and shares. Now in return they give certain interest to the public, but majority part of the interest is being kept with them. That is how mutual funds work. And core investment companies kuda we can call it like the NBFCs. That is also the next feature of like the NBFCs. NBFCs are regulated, or they are being registered under Companies Act. There are certain loan giving NBFCs, there are certain non-loan giving NBFCs. Now, apart from that, major part of NBFCs or majority of NBFCs are regulated by RBI. Now, when I say they are regulated by RBI, what does it mean like major part? We know that loan giving NBFCs are regulated by RBI because the one who provides loans, they are being regulated by the RBI. In fact, there are certain non-loan giving NBFCs which are being regulated by RBI. But when it comes to non-loan giving NBFCs, their regulators are different. Now, if you look at like insurance companies are being regulated by Insurance Regulatory Development Authority of India. Core investment companies, they are being regulated by Securities Exchange Board of India. So mostly their NBFCs are regulated by RBI. We can say loan giving NBFCs are regulated by RBI. In fact, some non-loan giving NBFCs are also being regulated by RBI, but major non-loan giving are regulated by RBI. Other than we have different regulators like IRDAI, SEBI, etc. This is also the point which we have to keep in mind. Now, the fifth feature of NBFC which we are going to discuss is like types of NBFCs. Now, when we talk about types of NBFCs, now what is the basis for this division? Now, we have two types of NBFCs, that is deposit accepting NBFCs and non-deposit accepting non-deposits accepting NBFCs. So we can write it as NBFC ND. We can write it as NBFC D, non-banking financial companies accepting deposits. Now, one point we have to understand is like the core difference between banks and NBFCs is like NBFCs, they never accept demand deposits. They never. But all banks accept demand deposits. That is the first point which we have to understand. So when we talk about deposits accepting NBFCs and non-deposits accepting NBFCs, we are not referring to demand deposits. We are referring to time deposits. That is the point which we have to keep in mind. Now, when we talk about deposits accepting NBFCs, like there are the few NBFCs that accepts time deposits. So we have like certain NBFCs where they do not accept demand deposits, time deposits. Now let us conclude. No NBFC accept demand deposits. That is the first point. The second point is some NBFCs accept time deposits. That is the point which we have to keep in mind. And most NBFCs, they do not accept any deposits. They do not accept demand deposits, time deposits. That is the point which we have to keep in mind. Now the question is, when most of the NBFCs do not accept any form of deposits, now how come they are able to provide loans? Now that is where the next feature comes. NBFCs, non-banking financial companies, mostly they raise funds from banks. So that is how the NBFCs are like instead of a lender, first they are the borrowers. So they raise funds from banks. That is the point. So in fact, there are also the secondary sources of raising funds, like it is in the form of like issuing commercial papers, like they are issuing shares, We know that commercial papers are issued by companies to raise funds from the public. So that is where they can issue commercial papers, but mostly they raise funds from banks. That is the point which we has to keep in mind. So NBFCs, since they are most of the NBFCs, they do not accept deposits, hence they mostly raise funds from the banks. That is the point which we has to keep in mind. So since they are so that is where NBFCs are unique in nature. They first borrow and they lend. Since they are raising funds from other entities, hence NBFCs charge higher interest rate on similar loans given by banks. When I say similar loans given by banks, if bank charge 7%, 8%, 9%, but the NBFCs, when they provide the similar loans, then they are going to charge like 13%. The difference might be like 3 to 4%. That is the point which we have to keep in mind. Now, if NBFCs are charging higher interest rate compared to banks, now the NBFCs should they should end. But if we look at the number of borrowers compared to banks, NBFCs has higher amount of borrowers. The loan amount is in fact lower, and the loan and the amount is takku, but number of borrowers are more. Why NBFCs have more borrowers compared to banks, despite they are charging higher interest rate? So it means NBFCs still compete with banks. When I say they still compete with banks, and the reasons are due to when banks provide loan, they have so complex process. When I say complex process, the paperwork, the collateral that is being required. So since banks provide loan and in the process is complex, but NBFCs they offer a simple process, because of which most of the borrowers from the unorganized sector, they attracts towards NBFCs. That is the point which we has to keep in mind. Now apart from that, సో దీంతో పాటు ఇంకా ఏంటంటే, in fact, during normal times, the loan recovery of NBFCs is so good. In fact, banks kuda they are good, but we has to understand that the loan recovery by these NBFCs edaithe undo, they are good in normal times. So these are the different features of non-banking financial companies, like the regulator, like the loan giving NBFCs, like the non-loans, like how they get funds, how they provide loans, now what is the interest rate, how they are being different from banks. So these are the different features of non-banking financial companies. Thank you.